All right. Hey, everybody. This is Brian Stickney, and we've got Forex Joe and Ricardo Menjivar with us here today. And we're going to talk about Ricardo's trading style. So I know, Forex Joe, you've got some great questions you'd like to ask Ricardo and just get a really good understanding of what he's doing, how he does it, how he's pulling those pips out of the marketplace so accurately.
Thank you, Brian, and thank you, Ricardo. First of all, I'd like to welcome everyone for joining us here. This is a little bit of a recording for TradeMate, and what we're looking at is some serious information here for TradeMate to get you involved now before the markets explode. And Ricardo and I share similar trading concepts. Of course, he has his own style. I have my own style. But basically, at 21st Century Forex Trader, we put together some software packages, and people are wanting to learn how to trade, but during that interim or during their journey, we are trying to come up with ways to allow them an opportunity to also earn while they learn. And that's why we've secured the services of Ricardo here from Hawkeye Traders, and we have found that he is the best type of person that fits our scenario here at 21st Century Forex Trader. Now, why is that of significance? Because there's four styles of trading. You've got scalping. You're just in the door, out the door. Day trading, where you try to cluck off 10 to 30 pips. Swing position traders, and a swing trader is looking for a 3-to-1 or more return. And Ricardo, that's basically what you're looking at. As a swing trader, you're looking for a 3-to-1 return with your stop loss. Is that correct, sir?
Exactly. That is correct.
All right. We also talked a little bit in previous webinars, or he has been a guest of ours at 2 non-farm payrolls, about manipulating the markets and how that takes place. Could you kind of explain that a little bit, Ricardo?
Yes. Basically, the banks have a portfolio of currencies, which in this case, if we're looking at just the 8 major currencies, like the Aussie, the British pound, US yen, US dollar, Canadian, the Swiss franc, New Zealand, Australian dollar, they have to rebalance that portfolio continuously. Could be daily, could be weekly, could be even monthly. And so what we try and do is that we try and basically follow that volume activity to see what currency pair out of the 49 that are derived from these 8 pairs is going to be rebalanced in that portfolio. Manipulated is a very strong word. Rebalance is a more appropriate word, because they're continuously moving money. Money is always in motion in this market, and they're continuously rebalancing their portfolio. So, for instance, last night, for instance, we identified that the New Zealand Swiss was the pair that they were going to be rebalancing. And, we basically saw that, or we were able to identify their intent literally 5 hours before it happened. Well, right now, if you look at the chart, you can see that that pair is actually going short right now. And the reason for it is because the New Zealand had levels of strength in the portfolio of 8 that could no longer sustain. And the Swiss franc had reached levels of weakness in the portfolio of 8 that it could no longer sustain. So their interest was driven to that currency pair. Now, rarely do retail traders even look at the New Zealand Swiss. That's not even a pair on their radar. In many cases, we're only, retail traders are looking at the euro dollar, the pound dollar, the US Swiss, the US yen, euro yen, pound yen, the Australian dollar, the US CAD, and that's pretty much it. Once in a blue moon, you'll take a look at the New Zealand US pair, but the New Zealand Swiss, never. And so this is one of the things that that we're able to key in with our technology, is that we're able to extract individual currency strength and weakness within the portfolio of 8. How are we doing that? We're extracting it from the 49 pairs that are created from these 8 major currencies. And so we can actually tell, the algorithm that we use will vividly plot when the New Zealand is taken to a level of strength against the whole portfolio of 8, and when the Swiss has been taken to a level of weakness. So when you see that, then we look for those extremities in those currencies, because we know that those two currencies are going to be rebalanced against each other. And that means that identifies the pair that we need to be concentrating on. Now, not, just because our leading indicator takes us to that level and identifies it doesn't mean that we're going to jump on the trade right away. No, that means that we go to the chart, we analyze the chart, and then we start to identify pivots, that start to plot, and we box those in. And why do we box them in? Because we want to see when they're going to be compressing against price action. And so we need to see that play or that trade is actually going to play out. Now, if you know that they're going to rebalance a specific currency in one direction, then you're not going to go long against it, because you know that they're going long to induce you to then take you short and then take your money. Well, we know when they're calling their bluff by using this technology. And so we'll stay out of a trade, and wait for them to actually go short. And then when they go short, then we know, okay, that is the direction that they're going to be rebalancing this pair in the 49 pairs.
Well, that's very unique, Ricardo, because you mentioned compressing against price action, which here at 21st Century Forex Trader, we're always talking about compressing and compacting numbers. You talked about pivots, which leads me to the question about the numbers in the markets, because I truly am very outside the box. The numbers don't lie, and with you looking at pivots, you're more or less riding the coattails of professional traders. I heard you talk about that in our last webinar. If you could share a little bit about that scenario.
Yeah, basically we have a program that basically pinpoints pivots within each particular pair. And just like you have your software 21st Century that does the same thing. So what it does is that it gives us, when you're trading, you have to look at trading as if you were painting a picture. If it's not painting the right picture, then you're not buying the painting. Or as if you were playing a musical instrument. If it's not playing the right tune, then you're not listening to it, because that song is horrible. Well, that's the way that you should look at trading as well. You should get it as if you were just playing poke, or you have two opponents and one made bluffing, or in chess, you have different strategies that you can play, and you're always trying to basically move 10 steps ahead of your opponent win. Well, trading is the same way. You have to be strategic, so you have to have all the information. And so, in my case, I don't really use moving averages. I don't use MACD, I don't use stochastic, I don't use RSI, I don't really look at Fibonacci or Elliott wave levels either. And the reason for it is because the banks, and this is what retail traders don't know, the banks have divisions of financial engineers. These guys are called quants. And their job is to develop algorithms and protocols to counter every indicator out there known to man. The one that they cannot counter against is their own volume activity. That's the one thing they can't hide. Because the way that works is that, for instance, when we see a candle in a specific platform forming, that's based on the orders that they're providing to the dealer. And so that information is being converted into a bar or a candlestick. Well, if they're not reporting that, then there's no volume in the market. And so they have to report that. Well, we're keying in on that order flow and that volume activity, and we cannot identify, for instance, how much volume they're moving, nor do I care. I care to know how their volume activity is relative to all the currency within the 49 pairs, how they're affecting, for instance, the New Zealand against the other 7 pairs, how they're affecting the British pound against the other 7 pairs, how they're affecting the euro against the other 7 pairs. And so in many cases, we'll find that their interest may only lie in 2 to 3 pairs, because they can only move or drive to possibly 4 currencies at a time, at any point during the day. And maybe their interest lies in rebalancing, they may be interested in rebalancing the British pound, but they may not rebalance it against the US dollar or against the euro. They may rebalance it against the New Zealand. And I've seen that happen many, many times. So sometimes we're distracted by other information that we don't have. And now we're able to access that information, which they can't hide. And so that is why when I look for a pair, it could be any pair. I don't have a favorite pair. That, like the New Zealand Swiss, it has literally, I'd like to say, 5 months since I've taken a look at the New Zealand Swiss, because that is not a pair that normally is rebalancing. That is a pair that normally in the portfolio is always in balance. So, now it's being manipulated significantly by their volume activity because they have interest in rebalancing that one.
Well, you bring up some valid points, especially with the fact that you're looking at 49 pairs. It's almost impossible for any retail trader to cover 49 pairs. Here at 21st Century Forex Trader, we only cover 22 pairs, so that's even a better reason for anyone out there looking at TradeMate to get involved. Also, those of you that are wanting to learn how to trade, especially during this time frame now for the rest of 2013, is a unique opportunity because of the way the markets are performing. So basically, you can earn while you learn, participating in TradeMate, or there's some of you out there that would like to increase your portfolio by itself only just to get involved with TradeMate. Now, you talked about volume activity, Ricardo, in our recent webinar, both you and I discussed about, and we call it here at 21st Century the summertime blues. But as a swing style trader looking for a 3-to-1 return, it's been kind of slow for the month of August, and I'd like for you to share with the folks why that is the situation, and when do you look for it to open back up again, and for them to possibly be in a great position to have profits coming in if they get involved with TradeMate right away?
Well, yeah, when I recommend a trade, the market conditions must be there. And for instance, right now, I can't really recommend any trades for TradeMate because the market conditions aren't there. The volatility is low. The senior traders for the banks have gone on vacation. They'll take a whole month off, and they really won't return until the 2nd or 3rd week of September. So when they return, then that's when we start to see the volume activity and volatility increase in the market, and we start to see, more trending of pairs. Right now, we're seeing a lot of range trading because they've left the junior traders in charge, and the junior traders have specific orders. Don't move the market. and they're following orders. Literally, they are following orders. They are not moving the market. And everyone's getting frustrated, but you shouldn't be, because you know what? They're doing it at the same time to distract you, to force you to take trades that you shouldn't be taking. And so normally I recommend people, as a broker, I'll recommend to my clients, take the month off. Literally, go do something with yourself, have a life. Take your wife out on vacation, take your kids to Disneyland, go fishing, go golfing, go play cards with your friends, go play bingo, go do something with yourself, but stay away from the computer. Because if you're in front of the computer, then you're tempted, to look at the charts and see if there's any opportunity. Well, right now, they're not really giving much opportunity. And so I have the discipline to not get into a trade when I see that there's nothing there. I won't force it. Many people will say, well, I want to go in and take 5-10 pips out of the market. You're free to do so. If you have the ability to do so, knock yourself out. Who am I to tell you otherwise? However, know and realize that right now, because the volume activity is low and these junior traders have been given orders, they're trading within a very tight range, and they move it in a very aggressive manner within that range. And so you can be caught on the wrong side of a trade very quickly. And so for instance, I use a 30 pip stop loss when I trade, or whenever I recommend a trade to anyone, any of my clients, I always tell them, use a stop loss. What is your risk appetite? Because any time that you're going into a trade, the regulators in our industry tell us that we must inform people that there is a potential risk of loss. It's not potential, it's huge. It's huge because the banks can see your orders. They can see your stops, your pending orders, your limits, you name it. They can see everything that you're doing, but you can't see theirs. Well, in my eyes, that's a huge disadvantage, and that is unfair because the retail trader really had a shot. And so, if you don't have the right information, then all you're going to do is get hurt because that's what they're looking for. They're looking to hurt you. And it's not personal. It's business. In their eyes, it's just business.
Well, as we use that Godfather analogy, one of the areas that I enjoy about trading in the Forex is the fact that it's 24/7. But what's very unique about the current situation is that, as Ricardo talks about, swing traders or professional traders are taking time off in August. There are still some of you out there that are scalpers and day traders. And those of you that participate now and come to our classes here at 21st Century Forex Trader have been involved with range-bound trades, live trades that Brian has been giving you. And just recently this week, he did over 190 pips using range-bound techniques that we share at 21st Century Forex Trader. So this is why the synergy is so strong between 21st Century Forex Trader and then Ricardo. Ricardo is looking for swing-style trading that I use. Now, he will protect you because he's only using a 30 pip stop loss. Most people will say, well, how come Forex Joe's not stepping in and doing all these trading? Because I'm with professional traders overseas and they may be using 150 to 500 pip stop losses. Why? Because they have the money to withstand the onslaught and they're looking to park their money and have their money protected until the markets take off again for 3, 5, 1,000 pip moves. No retail trader can withstand that onslaught even if we all put all our money together. So basically what you have here is the best of both worlds. You have a professional trader in Ricardo who will protect your portfolio that is looking for 3 to 1 or more returns. You can also come, for those of you that only want TradeMate, you can just be involved with TradeMate, remain patient, and he's going to help you get a return. For those of you that want to expand your horizon, then basically what you can do is come and learn or earn while you learn by joining our 21st Century Forex Trader and get our software, get our reports, and learn how to trade the various trading styles and find you and locate your unique trading opportunity or trading style, and also go to live classes and see how we put on the system using our numbers. Ricardo, as we kind of close this out today, I'd like to share with everyone that I'm very excited about what the future brings here for the rest of 2013. And if you could really share with people the one last area of the fact of being patient, because so many, and you've talked about this many times, so many people just want to have trades, want to have trades, want to have trades. But if you could really enhance and share with them what it takes to become a full-time trader and know that it's just not about the marathon. I mean, it's about a 100-yard dash, but it's about a marathon. If you could share that with everyone about doing this long term.
Yeah, basically, and look, it's taken me 9 years to get to the level of understanding of this market, and that's a long time. I'm not saying that it's going to take you 9 years. I've had clients that in some cases, after I've explained to them how the market works, and they may be really good chart pattern recognition, and then, they start using our software to key in on the volume activity, they explode. So everyone has a different learning curve, but the one thing that everyone has to realize is that to trade in these markets, you must become a trader as well. If I recommend a trade for TradeMate or any one of my clients, I need to make sure that the risk that I'm suggesting is minimal. But at the same time, if the market conditions aren't there, you can't force trade. And sometimes people don't realize that, when you're trading and recommending trades to someone, you cannot. I mean, as a broker, I make money every time of mine executes a trade. That's how I make my living. However, I want my clients to get hurt. And so if you don't see any activity, then basically it's because that person that's in charge of trading and executing trades is thinking more about you Because people say, well, but you're not trading, and I go, the market conditions aren't there. Do you want me to recommend a trade that would lose money? Because I don't. I'm the first one to walk away from a trade. And I'm the first one to jump into one when I see opportunity. However, because this is notoriously known in the industry that this month everyone goes on vacation, I leave the junior traders to do a lot of range-bound trading, then they're really, if you're looking for a 3-to-1 return on a trade, the way I look for one, then, and the way I recommend one, then basically these conditions aren't there yet. Doesn't mean that they're not going to come back, in September. I mean, I'm looking for September, October, and November to probably be some of the most explosive months in the Forex market, because now they're rebalancing their portfolio of currencies with exotic pairs. And what do you mean? An exotic pair is, within the 8 major currencies. But let's say an exotic pair would be like the New Zealand Swiss. The New Zealand Swiss, you're going to see this thing, roar 200, 300 pips a night when they decide to rebalance this currency pair. The Aussie CAD, when have any of you even considered looking at the Aussie CAD? And I've recommended the Aussie CAD quite a few times this month during our webinars. Why? Because the banks have chosen these two currencies to rebalance. They're not rebalancing the Aussie against the US dollar. They're rebalancing it against the Canadian dollar. And so if the market conditions aren't there and they're using these exotic pairs to just slightly move the market, well then I have no need to be putting myself or anyone else at risk or recommending anyone to be at risk. So patience is a virtue, and that's the one thing that as traders, even as novice traders, we don't realize and learn. That sometimes it's better to walk away from the chess table because it takes 2 to play, not 1. And if they don't have you on the other side, they don't have a game. And so, but when the right conditions are right, and they start to show their volume activity and volatility come back into the market, make no mistake, I will be the first one sitting down at the chess table, and I will be the one basically calling their bluff, because the one thing they can't hide from us is volume activity.
I agree 100%, absolutely, and I'd like to encourage each and every one of you now to take a position or get in a position with an opportunity that you're going to see on this page by clicking on the links. And we have a few other videos that you can record. It's on this page, so take a look at all the opportunity that we have here at 21st Century Forex Trader, whether you're wanting to get involved and learn how to trade full-time in the markets, or whether on your own, or whether you're just wanting to get involved with TradeMate and have Ricardo do everything for you. Because, folks, he will be in position, and as he alluded to, and I 100% agree, September, October, November, into December is going to be some explosive times. Those of you who's been with us here over the last year know from the end of November, December of 2012, where the US yen was at 79.50.80, we rode it up all the way to above 100. And we are looking for similar type moves here forthcoming the latter part of 2013. If you want to be involved, don't hesitate, don't procrastinate, get involved now and get in position and take advantage of our specials that we have.
Thank you, Joe. I really appreciate you, giving me the opportunity to basically explain to people the thinking process behind, becoming a disciplined trader and actually looking for opportunity and knowing when to walk away when there is no opportunity. And that's the one thing that many people don't realize and understand. So I'm actually glad that we were able to explain this to people so that they can understand that, there is a huge responsibility when you are taking on risk and trading.
Absolutely. Sometimes the best trade is to not trade. And current market conditions, especially now during the summertime, that's a perfect time to exercise that. So, yeah, thank you very much. Very comprehensive information you gave us, Ricardo. Great line of questioning, Forex Joe. So thank you both for being here, and we look forward to hearing from you next time. Have a great one.